entering into, not because only of price of energy, but globally because we have a lot of issues linked to the supply chains. We see that there is an inflation which is coming there. There are some debates between economists about is it for the long term, medium term, or just short term linked to all the COVID impact plus this war. But inflation is reaching a level, 5% plus in our economies, where I think central banks think it's necessary to intervene. Of course, it changed a lot. We are accustomed in our economies to have, say, free money for nothing, and suddenly money interest rates goes, which honestly with 5% inflation, we cannot have a world with negative real interest rates. It's too dangerous. So I think we were expecting that. Maybe it's accelerated compared to what we have. So it's new. It's new for companies. We are entering into a new world with higher interest rates than before. We will have to adapt.
The Federal Reserve itself admits that there's significant uncertainty about the economic outlook. There are market commentators worried about a recession. Does that make it very hard for you to plan when it comes to energy output?
You know, in energy, we are accustomed to volatility in the energy markets. You know, since I'm CEO, we have seen the price going down to $20, coming up, negative prices by 20%. So we are accustomed to prepare our companies to face this type of volatility. I think this is, yes, I don't hope we will enter into a recession. I think I'm not convinced. I don't think but we should be prepared to that. And by the way, all companies, you know, what we do is really strengthen our balance sheet, which is always my priority. Today we have high prices, so we benefit from that. But we reallocate a lot of this cash to just lowering our debt, because if we see this type of bad economic, I would say, storm, we'll have to rely on the balance sheet. So for me, it's be prepared. Permanently, I have to be sure that my company can weather the storms. And unfortunately, we go from crisis to crisis. You know, we had the COVID, then this Russian war, then maybe a recession. So we have to be equipped to face ice storms.
Jay Powell at the Fed now freely admits that they're making decisions at a meeting-by-meeting basis. Should OPEC Plus be more dynamic? We did see the increase to 650,000 barrels a day, bolstering output by that much recently. But do you think they need to be more dynamic, given that the data keeps on jumping around, producing surprising numbers?
But you know, they have also, when you speak to them about recession means an impact on the oil demand. High price means an impact on the oil demand. So these countries, of course, they want to monitor the oil supply, because we could face exactly the situation that we faced in 2020 when oil supplies was high, then the COVID came, the demand crashed. So they have to monitor that. You know, we all complain from them when the prices are high. We never say anything when the prices are very low. So I think, and by the way, as well, 2 years of quota, they don't have so much margins. I think we should not overestimate the capacity of the oil industry suddenly to accelerate the supply. No, because when you have two years of low prices, you invest less. And it's a big machine, but you don't restart by pressing a button. You don't produce more vaccine by one button in the oil business. So you have a time lag, so we'll try to adapt our supply to what the demand will be.